The EU is a monster, a corporate creation used to amplify the dominance of the elite over the middle class. This group, sometimes referred to as the ruling class, have designed the EU to have an unelected set of faceless individuals decide the laws of all subservient nations below it. There can be no positivity to this scheme. Italy has found itself in massive levels of debt as deflation picks up. Austerity has taken hold only on those who could really use every penny they can get. Simultaneously, the elite have begun selling off Italian assets in order to fully compromise the nation, preventing any chance of survival. Ancient Roman texts reveal the empire salting the earth of conquered Carthage to ensure dominance and slavery. Today, bankers and politicians have successfully accomplished the same task using modern-day financial weapons. You came here for the truth, so let me unveil that for you. Today we are going to get into Italy's massive deflation. I have a whole bunch of charts to show you. Let's get into that. I hope you like that intro right there. I'm going to get into these. There are many of them. This is not all of them. I just grabbed these from one particular website right here, bowwork.net, and you can look at these. And what I want to address here is how dire the situation is in Italy, and also extend that into the Euro viral contagion that I've talked about many times before. Let's get into this right away in no particular order, beginning with gross investment, Italy and France compared. France is the red line, Italy is the blue line. After the financial crisis, France, it took a dip down, but it began to sort of come back up and stagnate for these past few years. That's not a good situation, but it's surely better than what has happened in Italy. A more serious decline to begin with, and then it falls further as the years go on. The situation, therefore, even with all of the money printing, even with all of these criminal schemes that have been happening, it still cannot overcome the serious scenario that we're facing right here to multi-decade low. Let's move on. Real labor productivity per person. These numbers, just like most others, can be manipulated, but let's take it for what it is at face value. And at least we can compare these two nations. And once again, France, being the red line, it did take a little bit of a dip during the financial crisis, but has slowly begun to pick up afterwards. Then you compare that to Italy, who has definitely taken a dip during the financial crisis, came back up, but ultimately, again, in this scenario, been worse off today than it was during the financial crisis. This is not a one-off incident. This is what happens over time, that all of that stimulus wears out, and this is what you get. Let's move on to this. Italian bad debts. There is no good debts here. Bad debts as a share of loans, non-financial corporate bad debts, and basically goes on and on. But in all cases, worse than we were in the financial crisis. That's why I keep saying it's the financial crisis part 2. Look at this, and this is just one country. Imagine that. The ECB, their purchase programs, excluding public sector, and you can see what they're doing here. All I want to address from this here, the ECB purchase programs, is that even when they tell us that they've been tapering back, that is absolutely not the case, because we know that in order to prop up any of the systems, we need to have an exponential increase. You can't just taper off and have it eventually be picked up. It doesn't work like that, because ultimately, who's going to buy up that garbage debt? You just need to pile it on, and that's what they're doing here. The ECB, however, doing a little bit of a different strategy than the Fed, but it's ultimately the same thing. They're buying up garbage debt. And where are they putting it? On their own books. They try to claim that they're going to sell it off eventually, but we know that's not going to happen. So the ECB is important to watch. Over these past few years, we saw them really being highlighted during 2011, 2012, and sort of have been rather quiet recently, so this video is very important because as the mainstream media won't even cover them, at least we can have a few points on them just to sort of keep our eyes on it. Italian maturity profile. This is just getting into the different types of things. For example, the dark green arrows there or lines is the deficit, and that is one issue that will not be talked about, but of course that is extremely important. Essentially what we're looking at is when are these debts going to mature. Ultimately, as far as I'm concerned, that's of very little concern because at this point they're already bankrupt. So whether you're going to get into a worse scenario next year or 10 years from now, it doesn't matter. It's all fiction at this point. How much fiction? Well, that depends on the year, but ultimately, what are they going to do? What is the resolution? Well, we know what it should be, but what will be the resolution? Let's move into this. Italian interest paid on public debt. As more debt is accumulated, ultimately you're going to have to pay more interest on it. Who do you pay more interest to? Of course, the private bankers, but that doesn't exist. It's a conspiracy theory. And just to highlight one of these, interest as a share of GDP, if interest rates were equal to the average 2000-2005, and what we can see is that in those cases it's increasing. The GDP numbers, even though they're fraudulent and they include illegal conduct such as drugs and prostitution, we can see them increasing, but the actual interest as a share of GDP increasing. Why? Because things are getting worse, much more than even this GDP number, which is fake to begin with, is. That's when you know you have a big problem. This is from my book where I talked about the Euro viral contagion, stating that the financial crisis began. Ireland, Greece, and Portugal have received bailouts from the IMF and other countries. Their debt is just too much for them to handle. Spain and Italy are also highly indebted. And remember, this is written in 2011 and it was officially published in January 2012. Highly indebted, and the contagion could easily spread to Italy and Spain, two highly vulnerable economies. France, although, and this is relevant because of what I was just talking about with France a moment ago, it's Europe's second biggest economy. It has many Italian bonds. If Italy goes bankrupt, France will lose badly as a result. Now think about all these other nations. For example, China has a stake in the US. It's huge. It's important to think about. Many people believe that they're just going to pull out all of their debt at once and watch the country basically collapse. I don't see that happening at all. Countries support each other for better or for worse in many cases, but that's not what it's about at this time. It is about having really a stake in these other countries. Perhaps they look down in the future. Okay, 10 years from now, we don't want to be in this position, but at this time, you have to remember who owns what country's debt. It is crucial. Let's move on right here. Target 2, liabilities held by Banca d'Italia. And as we look at this, we know, just look at during the crisis here, that essentially what we had is an extremely high rate of liabilities, debt, and that hasn't changed since then. Yes, it's been fluctuating, but ultimately we're in the same situation. And who is going to buy up this debt? You have two options. You have the governments themselves. They can nationalize the banking industry, or it could be the central banks. In either case, it's really bad. This here, just a couple more things. Government deficit, government gross debt, and government net debt. All bad. Focusing on just the two on the right here, the gross debt and the net debt. Debt's increasing. It doesn't matter what country that you go into, you have debt increasing. And as I've explained so many times before, and I'm sure 99% of you on here know, the system is built around debt and it's going to continue to expand. Italian public revenue versus expenditures. Does this surprise anybody how we are seeing expenditures increase? We know that these governments will do anything to keep the system afloat, and they are spending more and more money. In this case, the public revenue versus the expenditures doesn't surprise me in the least. Italian debt and GDP in trillions of the euros. We have to understand, look, focus on the debt, for example. As you see from 1982 up until present day, a straight line upward. What are they thinking? How long does this last for? Well, at this time, if you compare it to the, I don't have the numbers in front of me, but just let's say with the Federal Reserve, bringing the interest rates down. Of course, every country is different. I'm just using the US as an example. We have declining interest rates. When there is declining interest rates, even in a major country like the US, it gives other countries an opportunity to utilize that. And bringing those interest rates down obviously has an effect on the whole world. Many things have happened over these past few decades, but one of them is that there have been consistently more and more easy monetary policies that is taking effect right now, and we see the debt expanding. Italian banking assets and the end GDP, as you look at this, stagnating since the financial crisis. Interesting, but I would have to just suggest that a lot of the debt, a lot of the activities of not just the countries, but also the financial institutions have been sitting off of the books. So that's important to note when you're looking at this. And last but not least, Italian bank loans outstanding by recipient sector. Whatever, regardless of what this chart says, we are looking at a time when loans or financial institutions are taking on more debt. In certain cases, you look at particular areas of Europe where people are basically pulling their money out of the banking system. But at the same time, there is more risk being taken on the part of the banks. So it's sort of, it's hard to show on a graph in this case, but you need to take both sides of it. That's what I try to do. Not just, okay, here's some charts. Well, why not just give you all the charts and, you can look at them yourself. No, we need to explain both sides of this. Just trying to point at certain things that some people may not really have noticed. I hope you do enjoy these videos. I'm trying to get into information about all different countries. Remember, it's not just about the US, it's not just about Canada or any other country. This is a global problem, and this is a global channel. I often do focus on the US because ultimately my friends here on this watching this video here primarily are from the US. So that's sort of the focus, but doesn't mean that I've forgotten my Italian friends, my Scandinavian friends. Hang in there. There will be a video coming, I promise. I've done one on Australia, on the UK, on Canada, on China, on Brazil. I'm just trying to go through, and as I see important information, I'm going to bring it out to you. Have no fear. There will be more information for the countries that you are from, India, and so many others that I've had requests for. I'm still trying to gather some good information, so hang in there. If you found this video informative, please give me a thumbs up. Thank you all for your comments on the question and answer videos. There's still a few more to come. There was so many questions, and I do appreciate that very much. And many people have expressed the fact that they want to see more of those. I will definitely do that in the future, but these type of videos are absolutely what my focus is. Last but not least, if you found that video informative, I know you will find my book, The Money GPS, even more informative. If you want to flip through the book, just head over to Amazon. They have this look inside feature. It's going to allow you to flip through the pages of the book to see if you like it. Take care.